All right, here we go. The dreaded V word, variable annuities. Now, let me be very clear. I've never personally offered a variable annuity to anyone because I've always been able to find something else that didn't have the concerns the variable has. But just because I've never offered one doesn't mean I'm saying they're all bad. But this is where most of the word annuity, the condensate, the bad news, the things you hear about annuities, this is where it comes from. By and large, and I don't say Mark Henry said, but by and large, it's been my experience that variable annuities have the highest fees in the industry. They have a lot of fees. One of the largest fees found inside a variable annuity is the M&E charge. You say, what is the world is the M&E charge? What is that, like maintenance and expense? No, actually, it's the mortality and expense fee. You say mortality, yes. Guess what? You decided to take some of your IRA dollars, and at some dinner seminar where they were buying you a steak dinner, you got sold a variable annuity. Or maybe it came from your local big box retailer, or very likely your bank. It's one of the #1 products used in your local bank, variable annuity. Why? Has the highest fees and commissions in the industry by and large. So you went in, you took some of your IRA dollars and put them in a variable annuity, and you probably had no idea you were buying life insurance. That's right, variable annuities include life insurance in them. Here's how it works. Let's say your M&E charge was 2.5%. You put $100,000 in, that means $2,500 a year is going to pay for the insurance policy. The insurance policy is what guarantees you if your $100,000 annuity goes down in value because the market went down, now it drops from 100 down to 80,000. That's not good, let's be very clear. And then something else happened that's not good. You died. Look, I know where I'm going when I die. I don't want to go today. So now your $100,000 has dropped to 80 and you died. Well, guess what? That life insurance policy you were paying $2,500 a year for, in that example, restored your principal from 80,000 back to the 100,000 you started with for your beneficiary. That's how they get away with making statements like you can't lose money. Well, in that example, you did lose money. Your 100,000 went to 80,000 because of market conditions. Remember, it's called a variable. That means it can go up and it can go down. Then you died, so that insurance policy became valuable. In fact, the lower your annuity drops, the more valuable that insurance is. Think about this. If your $100,000 annuity went down to $10,000, at least that $2,500 in this example is buying you $90,000 worth of insurance. Well, wait a second. What if your $100,000 went up in value? Even with all the fees and everything else in these things, you actually made money. That's why you chose to do it. So your $100,000 turned into $200,000. In that example, now you're paying $5,000 worth of insurance on the M&E charge for something you don't need, because if you die now, your beneficiary gets the $200,000. It's an absolute racket. So buyer beware when it comes to purchasing variable annuities.